Markets very flat over there. Beat really came in from the oil to chemicals business, which was very strong, and that led to a consolidated profit growth of 22%.
Last Monday's range still remains very relevant, both the high and the low.
The news with regards to Sun Pharma is negative this morning. They have received a letter from the US drug regulator for their Mohali facility.
Here's the first take that we're getting on the index. It is well in the green, 80 points higher now on the Nifty.
There is some bit of that slowdown which is there. Maybe, people are sort of wanting to save slightly more given where the inflation is right now.
I am quite confident with the current productions of WCL or ACCL.
Markets continue to remain wedged in a very tight band.
So with respect to stake in SDFC Life and SDFC Ergo, the bank can take up stake over 50% in both the entities.
Institutions like KKR, Temasek, Carlyle have all done their homework, and they figured that there's a lot of opportunity to make back the returns from how much they're investing in making these expensive acquisitions.
Nifty actually has surged from the lows of the day. It is at the high point right now, 82 points higher on the Nifty right now.
That was the day so far. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbhi and Nigel here in the studio, and we've got Mangala Malu in the newsroom. What a comeback, right, for the markets. The morning was so very quiet, and now suddenly we're up close to about 100 points on the Nifty, almost there. The sensex too is surging in trades, and the banks. Look at the banks. The Nifty Bank is up close to about 500 points, and that contribution plate will tell you the entire picture. How names like ICICI Bank, the good news, the relaxation on HDFC Twint has provided that further fillip in the market. So in fact, ICICI, HDFC and HDFC Limited, these three are contributing almost 2/3 of the overall Nifty gain today. The good part is that these stocks like ICICI, HDFC Bank, HDFC Limited and Reliance Industries together have a weightage of 35% on the Nifty. These stocks have some positive news going for themselves. The other big pocket in the market is IT, 15%, and IT has stabilized, and it appears the worst, at least for the near term, maybe behind IT in terms of the price action. So if you combine the good news on the banking names plus Reliance and IT, we're talking about 50% of the market, which actually is in a stable to a positive environment, and that's really providing that fillip right now. So Europe is not doing too much. I think the last time I checked, Europe was absolutely flat, a bit of a negative bias, but propelled by the banks.
Earnings.
The tide is turned from negative, and we're now getting good numbers.
I get a little scared before making these kind of statements, because just when you make them, things again change for the worse. But yeah, for what it's worth, I think the ICICI Bank rub-off is very evident on a lot of stocks now. Whether you're looking at an Axis Bank or a SBI, even indices numbers will talk more about them. You can argue that, okay, net interest income is about 40 crores short of the estimates, the CNBC-TV18 poll, but asset quality is stable, provisions are stable. The real meat will only come once we know the margin profile and the loan growth details, deposit and loan growth details. So we are waiting by for that. But otherwise, banks really are leading from the front. I just thought I'll put the stats out there. For this month itself, the Bank Nifty is up about 5%. The PSU banking index is up over 6%, 6.8 actually to be more precise. And the Nifty itself is up about 2%. So banks have been the leadership sort of sector for the market for the last couple of days. One final point, Nigel, and your thoughts on this. I know you've been looking at levels in the FNO market as well. This move obviously is fantastic. The fact that we've managed to go above 17,700, we seem to be stabilizing there at least for the time being. That's the high. That's the high of the April rally. Remember the 9 consecutive days of gains that we were talking about? It ended there from that level, 17,863, and it turned. So I thought I'll just put it up there saying that we're still a little distance from that mark. But I guess the bulls will take today's performance with both hands.
Well, that's right. Earlier this morning, I put out this point that, 35% of the index, as Reema said, will react to positive news flow. So those stocks are unlikely to move in the red, which is great. And IT stocks, as Reema mentioned, they as well are giving some bit of backup. So that's good news, right? Now, the Nifty Bank, that crossed the 42,600 odd mark. Last week, we went to that level and we saw a bit of a U-turn. Very important that the Nifty Bank holds above this 42,600. It's the highest levels we have seen all the way since January 25th. So it's a 3-month high that we're looking at on the Nifty Bank. At the end of today, you'll want it, to end at these elevated levels. And just take a look at it. When the Nifty bank started moving, that's when the Nifty as well got its legs. And that's why the Nifty is now holding above that 17,700 odd mark. But guys, for the time being, the Nifty, maybe it goes to fresh all-time highs. That's an entire move of around 5%. I think at higher levels, though, the index will find it difficult, say, to get past that 18,500 to 19,000 mark, if in case we need to move up. The real action is going to be in the broader markets. And today it's heartening to see after the mid and the small cap indices, they started off in the red. Now the small caps are outperforming what the Nifty is doing. So that means portfolios are feeling good. I'll tell you what, many on the street will say, you can keep talking about the level on the Nifty, but it's going to be at most closer to around 19,000 odd. The place where you're going to make big money is in the broader markets. And the small cap index up close to 6/10% after seeing a good bounce in April. That's heartening. The options data, though, it's very, very interesting. At the start of today, we're looking at the 17,600 put. That had a good amount of open interest built up. And currently as well, it's added close to around 50 lakh shares, which takes the total open interest to around 1.37 crore. But what is even more encouraging is now you're seeing the nearest possible strike, which is 17,700. That's added 72 lakh shares. And currently for the expiry on Thursday, it has 1.6 crore shares, which is the highest open interest across all series. So that's telling you that those writers, they believe that maybe in fact the base of the market in the near term, that's the next 3-4 sessions, it's moved up to around that 17,600 odd from around that 17,500. That's the options data. Let's see whether or not it holds out. But for the final 60 minutes, the IndusInd Bank numbers are in. Abhishek will be joined to tell us a little bit more about it. We need to close above that 42,550 to around 42,600. That's what will give the bulls a bit of a chance tomorrow to come in and try to get past that hump of around that 17,800, given that tomorrow we have the financial Nifty expiry as well that plays out. We're currently seeing a 130-point downtick from the day's high, so keep an eye out on the Nifty bank. Mangalam, what else?
Well, Nigel, I'm looking at a bunch of mid-caps, and that's where I guess, we're looking at big gains coming by. The mid-cap index actually is just about underperforming the frontline indices, up about 1/3%. But beneath the surface, all these, railway stocks, RVNL up 11%. We are seeing big moves come by in Ircon and Railtel as well. Both of them up around 6 to 7 odd %. But then a bunch of other infra names as well. Usually the stocks that do well when the small cap index is doing well. So we have big moves coming in. Power Mech projects, that one's doing well. TD Power up around 5% as well. India Bulls Real Estate as well. Something's definitely cooking out there. The stock up 13% and huge volumes piling up out there. So, the advanced decline ratio as well as the mid-cap index at an index levels, the moves that we're seeing aren't telling you the entire picture. The big moves coming by in a large part of these cash market stocks and a lot of these sectoral moves which are taking place right now. So, good moves coming in the mid-cap end of things. The Nifty 17,700. Let's see where we go from here.
Mangalam, looking really hard to spot those mid-caps. Now we have a new look now with the glasses, is it?
Yeah, because for the last 3-4 days, I think the Nifty wasn't doing anything. And I thought maybe
we put on the glasses to find the stocks.
And that's where they came in handy, I guess.
That's Mangalam Malu changing his look as the market mood changed.
Repositioning himself, I think, Bagla.
Well, I have to give credit to Rima. The other day, in the morning, I was just trying someone else's glasses, and Rima said, "Oh, you should wear them." And I said, "Okay, that's a great idea." Then maybe I went over the weekend and bought them. Mind you, these aren't numbered glasses, so these are just for the look, I guess.
All right, Rima, what else are you suggesting?
I think let the market digest this. Let us and the market digest it.
All right, let's do that.
We'll look at incremental changes in a bit from now.
All right, let's get back to the market action. How do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, what's your take? Finally, it seems that the bulls are trying to make a bit of a dash towards that 17,800, 17,850. What's your view from here on? Do you think we have enough?
So I think, we have been talking about this fact that the markets will consolidate and eventually pick up. I think that picking up the first leg has just started. The indicators, which were overbought sometime in the second week of April have pulled off. And now I think they're just turning up. So I think they should get strength. The intraday averages are placed around 17,650. So if somebody wants to buy now, that becomes a stop loss on the spot level. So take 10 points below that. And I think a retest of 17,825, 820 is the first target, though I suspect 17,970, 18,000 is the actual target, or maybe, we'll revise even that on the upside. So for the timing, the tide is just turning. Start getting long already if you're not on the index. And on the stock side, we're trading with long bias, and right now, have two buy calls. Wipro, which had a news flow to it, gapped up today and now it's again moving up. So that's a buy with a stop just around levels of 371 for targets of 390. And the other one is REC, which after consolidation could be picking up steam. So that's a buy with a stop at 121 for targets of 130.
Okay, those were some trading ideas. Innocent Bank is the stock of the moment right now, and it's placed at a very critical juncture. It's just about 6 rupees away from its 200-day moving average. The stock is currently at 1,120, while the 200-day moving average is 1,113. And the stock has slipped post the initial positive reaction on the numbers. Abhishek is here with more details and the first cut. Abhishek.
Well, operationally, a weak quarter coming in for IndusInd Bank, given the fact that if you take a look in absolute value, one of the rare instances that you are seeing in this quarter of a bank reporting increase in gross NPA and net NPA. So absolute value, gross NPA is up 2% and net NPA is also up 2%, which is weak, considering the fact that on an industry level, the gross NPA and net NPA are improving. We need to wait for the movement of gross NPA details. As per Phillip Capital, they were estimating 1,400 crore of slippages for Q4. So how that might have played out in this quarter needs to be seen. And if at all it is higher than that, then that will be taken negatively. Operationally, the NII growth is on the weaker side. As per our poll, we were working with a number of 4,716 crore. It has come in a little under 4,670 crores, which is a miss of nearly 1%. So even their operating profit growth is below their overall loan growth, coming in at 12.9% YOY and just 1.9% quarter-on-quarter. So lower provisions have aided the PAT this time around. Provisions have declined by 29.6% YOY and about 3.3% on a sequential basis. So they have reported a PAT of 2,043 crore, which is up above our estimate of 2,012 crore. So business momentum has remained pretty strong for them. They had reported this business number of deposit and advances earlier as well. Cost to income ratio, that's seen a sharp spike as well, 44.9% when compared to 43.5% in the same quarter last year and 43.9% in the previous quarter. So overall, operationally, a weak quarter for IndusInd Bank. Back to you.
Okay, got that, Abhishek. Just when I think the street had started celebrating after ICICI's numbers, well, IndusInd, not such a, whatever, phenomenal show, let's say. We can call it that. Thank you for the updates there. Well, let's take the conversation forward. We have Dilip Bhatt now joining in on this leg of the show. Dilip, good afternoon. Always great to have you on the show. So banks it is. That has to be our first question, right? Any thoughts on IndusInd, what Abhishek was just pointing out? And of course, this stellar performance from ICICI. I think the debate is around margins. That even if, let's say, margins start cooling off from these high levels, whether banks will still draw incremental money from investors.
Good afternoon. It's always a pleasure to be in front of you all. You know what? I think ICICI Bank really showed the way that everything is really proper, the way they're managing. And I must say one thing, that ICICI appears has seized the leadership of the banking space, which in my opinion was ceded by HDFC Bank. So I think in that sense, ICICI possibly is doing all the right things. And if you see the NIMs, if you see the overall credit growth, even managing the NPAs, I think they have done an excellent job. And as far as IndusInd Bank is concerned, I thought that almost all the parameters, they have probably been behind or lagged behind what the expectations were. Though I have not seen the results in details. But certainly, I think it's a little bit disappointing. But having said, on an overall basis, I think in banking, HDFC Bank also has shown a good performance. But operating costs, I think that is going to remain at, OPEX is going to remain at elevated levels, and possibly that will continue. So clearly, I think in the banking space, ICICI appears very decisive, and one should really back it, despite the over-ownership in the stock in terms of the domestic as well as the FII investors are concerned. But overall, I think this will really lead the way for the banks and for the Nifty also, hopefully.
So you are positive on banks, and in that ICICI Bank, let's ask whether you are positive on the insurance space or not as well, Dilip. But in just a bit, because the Reserve Bank has offered HDFC Bank relief on priority sector lending norms and permitted the merged entity, the HDFC entity, to hike its stake in HDFC Ergo and HDFC Life to over 50% before the effective merger date. What this basically means for HDFC Life is that there is the supply overhang which has gone away. What are the brokerages making of this? Surbi joins in with the details. This is Surbi Sutaria. Surbi, good relief coming in for HDFC Life.
Thanks for that. So RBI's decision to allow the merged entity HDFC and HDFC Bank to own over 50% stake in HDFC Life comes as a double booster. Now with this, HDFC Life will become a direct subsidiary of HDFC Bank. Now currently it has around 50% stake in the HDFC Bank channel, which is likely to improve from here on. Also, this will help to reduce their cost of distribution in the HDFC Bank channel, which will in turn help them increase their margins. Also, the possible overhang of a 19% stake sale by HDFC and HDFC Bank, if the RBI had directed to keep the stake below 30%, is now gone. Rather, it is now certain that the merged entity will acquire additional stake before the merger completion. Currently, Aberdeen holds 1.6% stake in the company and Exide Industries holds around 4% stake in the company. Just to alert, in September of 2022, Aberdeen had sold nearly 2% stake in the company. On the back of this news, brokerages have also upgraded HDFC Life. MK has upgraded the stock from an hold to a buy rating with a target price of 650, and Investec says that the stake sale overhang is now gone and HDFC Life remains a preferred pick for them among the life insurance players. They have a buy rating with a target price of 560.
All right, and that was one of the biggest gainers today on the Nifty itself. Thanks so much, Surbi, for joining in. Dilip, what do you make of HDFC Life? One would think that maybe for some, who are a little bit skeptical on the growth prospects, I think FY24 is likely to be a flattish year in terms of growth. Would you buy it at around this 550 odd levels? The overhang clearly goes out of the way. The 19% overhang goes out of the way. But at 550, would you buy it? Or would you rather, if you had it and you bought it at earlier levels, would you get out of it?
So, Nigel, I think HDFC Life certainly is one of the better managed companies in the sense, in terms of all the major parameters, they are probably doing pretty well without any doubt. But having said that, certainly this RBI relief is going to remove the immediate overhang of the potential sale threat that possibly was going to happen. But we have seen that in HDFC Life, on and off, we have seen that apart from this sale, I think the promoters have also sold the stock very regularly, or some major investors also sold the stock. So I think that overhang possibly will continue. And even if on a strategy-wise basis, even if HDFC Bank has not to sell this immediately, but if they were to get a suitable price, they would like to definitely offload a part of it and reduce their burden also, which possibly might come in the future. So taking all these things into account, especially the supply side, I think while the immediate threat is not there, it may be in the medium term they will resurface. So I would not be in a hurry to buy HDFC Life from the current levels. Despite, I think, the fundamentals being quite in place, I would rather hold on to the stocks that I have at the moment rather than buy fresh and maybe look for exit maybe in the near future.
Dilip, do stay on. We need to slip into a mandatory break. On the other side, we'll talk about Tata Consumer. Tata Consumer is up 4.5%. What's the reason for this up move? We'll get to the details of that. And we'll also be joined by Rajesh Kothari of Alpha Accurate Advisors on the other side.
Holding with a gain of 1% plus on the Nifty Bank, the Nifty 0.5%. We have a couple of consumer names doing well. We have Colgate, which has moved to the high point of trade, and giving it company is Jubilant Foodworks as well. Jubilant Foodworks has also moved to the high point of trade with a gain of about 1.5%. But both of these are overshadowed by the big gain that we're seeing on Tata Consumer, up almost 5% as we speak, and this ahead of numbers tomorrow. So let's see what the street is anticipating this time. You know, before today, the stock was down almost 20% from its 52-week high. Now the street is definitely expecting something in the numbers, or so the stock price move suggests, because revenues, you know, a CNBC-TV18 poll expects a growth of 11% in the company's top line, 3,528 odd crores. The EBITDA grows just about 6%, telling you that the margins would compress by about 50 to 60 basis points, but the net profit grows by about 11%. The number you're looking at is around 265 crores. But beyond the numbers, important to look at what's driving these numbers. And for them, we're expecting the India overall business to grow anywhere between 10 to 12%, and led by the India Foods business, where the company has maximum of its thrust right now, 26% growth seen there. The India tea business likely to grow just about 1 to 2%. That's because of the sharp price cuts that the company has taken in tea because of the reduction in tea prices overall. And Narishco, which is the company that they entirely acquired, which was a JV with Pepsi, they're expecting revenues of close to 150 crores this time around, and this is because the company had given a guidance of 600 crores in this business in this year itself, and next year Narishco is likely to grow to all the way up to 1,000 crores. The most important thing to track in Tata Consumer this time would be the margins in the international business, because they've been under pressure for the last couple of quarters, but showing gradual quarter-on-quarter improvement. So were they to improve beyond what the street is expecting, then maybe things would be further on the mend for Tata Consumer. Trading at 44 times, not particularly cheap, but then again, it's close to its median valuations too. Dilip Bhatt still with us. Dilip, your thoughts on the consumer space, and do you think Tata Consumer can go back to its glory days?
So coming back to the consumer space, I think more so in the FMCG space, the way we have seen that the inflation has hit them, both on the cost front as well as on the demand front, particularly other than the urban areas. We have seen areas other than urban have taken a big hit. So I think on a momentum side, as the year pans out, I think somewhere we'll see that inflation easing off, and possibly we'll see a good jump in the EBITDA and also a good jump in the profitability even at the bottom line. So tactically, some of these FMCG companies will become a good tactical short-term play from this perspective, as demand also gets revived in the areas other than urban. So coming to Tata Consumer, I would say that, as what you very rightly said, it is extremely expensive, but I'm sure that names like Tata Consumer, which is in a very solid growth phase, so it's never going to be cheap. I would certainly look to buy this stock on a SIP basis, and without any doubt, I think the high valuation is something which is going to bother us, but possibly that will remain perennial, that valuations will continue to be expensive. And particularly in this scenario, when all the high value stocks are taking it on the chin, but still out of that, I would prefer Tata Consumer. Yes, I think I'm still banking on the future growth for next 2 to 3 years, even in the international business. So I would still, I would say that yes, it merits a buy.
Okay, all right. Good to hear that view, Dilip, on that one. Dilip, I wanted to ask you about this company. You're tracking the pipe space and Hari Om Pipes. I'm not sure whether or not you're still tracking that one, but it's caught everyone's imagination in the last 1 year. It's done very, very well if I compare it with the small cap or the mid cap space as well. Today, it's come in for some selling. It's down close to around 3%. Do you have a view on this one?
Well, I think as far as Hari Om Pipes is concerned, yes, we do track this company. One thing about this company is that in this particular pipe segment, like there are Apollo, there are JTL, there are so many other companies which are there. This company continues to have one of the highest EBITDA per ton. Not one of the, but the highest EBITDA per ton. And that to a great extent also is because they have actually done good amount of backward integration. So if you were to deconstruct their EBITDA per ton, I think at every level they are making a reasonable money. They have done an acquisition very recently in Perundarai, which is close to Coimbatore. So I think that also is going to come in very handy because they got it at a very reasonable price. So all in all, what we think is this company can report from say around 600 crores top line for FY23. It can go right up to 1500 crores in FY24, and possibly a profit of around 125 crores next year looks very much possible. And that will be accompanied by a good amount of free cash flow that will be generated and a very high ROEs. So of course, the stock also has done up quite a bit. Maybe there will be some consolidation, but on a longer term basis, this stock really looks pretty interesting even from the current levels.
Got it, Dilip. I think you were tracking that, so we took your view on it. But just to alert our viewers that the stock has seen a big increase, Dilip is factoring in the next year or so, the revenues could double from here, and net profit could be in that vicinity of around 120, 125 crores. So let's see how that goes. It's under pressure. Just thought we'll ask him on that. Thanks so much, Dilip, for joining in and filling us in with your view on a whole host of stocks. But Rima, the mid-cap space is looking pretty okay.
Yes, absolutely, particularly mid-cap IT. Yeah. Just want to quickly touch base on Wipro. Now, Wipro has announced that on Thursday, when the board meets to consider its results, they will also consider a buyback. If they announce a buyback, it will be the 5th buyback by the company in the last 7 years. Last year, the company did not do a buyback because they were focusing on acquisitions. So there was this cash which was used for M&A. Right now, the street estimate is that the company's buyback could be around 10,000 crores. So JPM estimates the buyback could be in the size of $1.2 to $1.5 billion. Morgan Stanley says based on the past buybacks, they're saying the size could range between 6.5 going up to 10,500 crores. Now, the last 3 buybacks were tender buybacks. The tender buyback allows the promoters to participate, and that's something we should probably expect this time too. A tender buyback with the promoters participating. The good part about a buyback is that in an uncertain environment where the prices have been under pressure for IT companies, a buyback typically provides that support. But the key is going to be earnings, because the stocks usually move on earnings. And this week, we're going to get a slew of IT earnings. So the other 2 heavyweights in the other 2 large caps, Tech Mahindra and Wipro, will be reporting numbers on Thursday. But outside of that, numbers will be out from LTIM, that's L&T, Infotech, Mindtree, LTT, L&T Technology, Emphasis, Coforge. Persistent will be out tomorrow morning, KPIT, Oracle. Basically, the entire bunch of IT numbers would be out by the end of this week. So that's IT for you today. Very stable.
Rima, that's an extremely busy week for you, eh? Clearly on IT earnings. It's not over yet by any stretch. I just wanted to point out, by the way, look at the market. Market is putting on a little more momentum. Now we're up 17,730 plus. And IT is now a sector that Rima was just pointing out. That's now starting to contribute a little bit incrementally. Pull up a TCS intraday or a Tech Mahindra intraday. Some of these stocks are better off. HDFC Life is trying to get back to the morning highs. So there's a fair amount of momentum. The banks anyway have been firing on all fronts. A little more momentum on ICICI, on Axis Bank. So it's a good-looking screen as the bulls try and take greater control of the picture right now. Well, good time to then get back to the market and start a market conversation. Rajesh Kothari, Managing Director at Alpha Accurate Advisors, is with us. Rajesh, thanks for joining in. Before we get down to more individual themes, just your sense on how money has moved, because when the earnings season started, there was this flight of capital from IT. Then we had the bank numbers starting to come in, and it seems that that part of the market is a little more buoyant. In terms of large cap allocation, just tell us how you're going up, dividing the incremental flows that you're getting.
Well, I think, no major change in terms of our views, As far as IT sector goes, we have been underweight IT from almost last, I would say, 1 year plus. So we actually reduced our weightage on software sector in March 2022. The days when Russia-Ukraine war was announced, the days when Fed has already announced its war against inflation, and therefore it is obvious that the US is going to enter into a slow growth lane. And of course, the valuations of IT stocks that time, after 1 year back, they were almost like, which is a perfect picture kind of thing. Everybody was assuming 20-25% sustainable of the earnings growth, and then very high PE multiples compared to its own 10 years average multiple. So, and hence we reduced at that time. And now, of course, in our thesis is coming right, and we still remain underweight on IT sector. I think it will be more of a on our watch list, because now, of course, the valuations have corrected. But I think growth is still going to be a little bit under question mark. And right now, at least we are not yet buying. We remain underweight on IT.
All right.
Capital goods is one theme which we continue to like. No change in that. Banking is one thing which we continue to like, no change in that. And of course, incrementally, we are further adding to our consumer sector weightage. We believe the worst is over for the consumer sector. So these are the three sectors on which incrementally we are positive.
All right. Among the other underweights that you have, Rajesh, is pharmaceutical as well. Now, at an index level, the pharmaceutical index has been one of the better performers this month. It's recovered about 9%. Individual stocks doing extremely well as well. At what point do you start looking at pharma once again? Do you continue your underweight despite the outperformance in the last few months, last few days, or you believe that now is the time for you to revisit your position?
To be very frank, Nigel, nothing much has changed fundamentally in last 2 weeks, except that the index actually made a kind of a new low, and probably that attracted some flow. So very difficult to know why it moved up. And of course there are reports that the new products are getting restricted because of the lack of approvals or new facilities by US FDA, resulting into some pricing stability in US market. Well, that's right, but the problem is the growth is not yet back, and we are still monitoring it. So I think pharma from here on is going to be more bottom-up opportunities rather than top-down opportunities. I think top-down is not going to look that great for pharma sector, at least in the near term. So that's our view on pharma.
All right. Hi, Rajesh. This is Nigel now. Mangalam asked you the earlier question. Rajesh, y'all have been generating good returns, and as you spoke to us last time as well, you said that you'll move your portfolio around, and that's how you're getting that alpha for your investors. What about the insurance space? Banking is something that you like, and as a percentage of your portfolio, I think that has the biggest weight. But insurance, is that providing an opportunity, or you will stay away from that space as well?
I think we are holding the large banks, which in turn has their subsidiaries into insurance space, both general as well as life. So it is better to play through that. I don't think insurance is providing a great opportunity to invest. The penetration story, of course, on that macro driver looks very promising, but important is how the actual growth is coming back. And I don't think at least next 4 to 7 quarters probably are going to be challenging mode. Also, sector probably will get more regulations kind of thing in terms of both on the distributor side as well as on the kind of a product side. And that makes me a little bit kind of I would say, cautious on insurance space. So we are not too bullish on the insurance sector in specific for the medium term. And I think when you play the large banks, anyway, we are buying those insurance things in a small way, am I right? I think that's a better way to play through. So we continue to remain, very bullish on the banking sector. I remember last time we were discussing on the net interest margins, and I was mentioning that I think at least for next 1 or 2 quarters, I don't think that is a challenge. And look at the numbers of the, the top tier banks which have announced their results recently. The NIMs have continued to remain very strong. So I don't think, NIM is a worry, at least for another 1 or 2 quarters. And non-food corporate credit growth is improving. Asset quality trends are very good. They are very healthy. India is coming back on growth. And I think this sector will do reasonably well.
Rajesh, just one quick question on consumer. You said you like consumers. You will put more money to work in the consumer sector because the worst is over. In that, what are the pockets that you like? How would you select your individual stocks?
I think after probably, learn of almost, I would say, 2.5, 3 years, we believe both the segments, discretionary as well as non-discretionary, will do well. Remember, last 2 years, we were more bullish on the discretionary side. But from now on, we are equally bullish on both discretionary as well as non-discretionary. One, of course, important reason is we think that rural demand growth will bounce back, which has been impacted in a big way last 12 months. I think the rural demand growth is going to bounce back. Number 2, the focus on a better product mix remains the strategy of most consumer players. Number 3, The raw material cost, which was a major concern, which impacted the operating margins of most FMCG players, I think it will now work as a tailwind rather than headwinds. And number 4, importantly, again, we need to be selective, but I don't see, major problem in terms of, people are saying now whether urban will slow down. I don't think that's going to be bad. And if you look at the valuations, while the valuations look rich, but if you look at last 5 years market cap growth, and you plot it against profit growth, they are almost like 1 time. So it is not that market cap growth has been significantly higher than the net profit growth of most of the companies. So valuations are at their last 5 years average valuations. And I think that provides a good entry point if one has a 2-3+ years of view. I think from here on, one can make decent money in consumer space.
All right, decent money in consumers. Rajesh, always a pleasure speaking with you. Thank you so much for joining in and giving us your sectoral picks as well as preferences for, sectors within those sectors as well. Hope to speak to you soon again. But now it's time for our favorite D Street Chatter segment, and not before a big move on the markets. In fact, at the high point of trade for the Nifty, closer to the 17,750 mark, and we're seeing this up move led by the banking space itself. The banking index is up around 1.2%. So good time to get an insight into the dealing room. Nimesh, the last few days we've been talking about how a comatose dealing room was looking at no news coming in. But today there's been a bit of an up move. Has the news followed?
So it looks like it's largely on back of the news flow that which we had over the weekend, and on Friday we spoke about it, right? I mean, this was expected, either a gap down or a gap up, depending on what numbers come in. Reliance was supportive, ICICI Bank was supportive, HDFC announcement was supportive, HDFC Bank news. So all this has led to a bit of an uptick in today's market, backed by some institutional buying as well, and that buying is largely followed in the banking stocks. That's the overall feedback, and hence you're seeing the bank Nifty supporting the highest in terms of today's move. I guess there is a small buying traction in the mid-cap IT as well. Well, large-cap IT is not supporting too much, but there is a bit of sense of some buying interest back in the mid-cap IT, and largely because there are a couple of earnings as well, which are going to follow this week. So that will be something important to track. Now we are heading towards the upper end of the resistance of 17,800, 17,900 levels. So that's something to track going forward. And I guess earnings are going to dominate the near-term trends as well. But largely today's move is backed by buying in the financials. That's leading the rally. But there is a small bit of buying in outside of financials as well, and that's helped the Nifty to gain almost 100 points in today's trade.
All right, so that's about the frontline index. But a lot of individual stocks, they're surging beneath the surface, and big moves, big volume action happening. What are your stocks that you're? I mean, where are you sensing the news?
So there is a lot of news and a lot of action in the broader markets, and that's why all my stocks today are largely part of the broader basket. So the first stock is India Bull Real Estate. That stock is buzzing in trade after a long time. We're seeing such a big move and on good volumes as well. I believe the NCLT order is reserved as far as the embassy merger is concerned. So that official announcement should come very soon, and hence we're seeing a big move in that stock. It looks like finally the merger will go through. The fact that this has been going on for so long. So that's the reason why that stock is reacting today. So that's the first one. The second stock is AB Capital. In the afternoon block window, there is a large block, nearly 1 crore shares changing hands, or nearly 3 crore shares changing hands, which is 1%. Looks like it's an internal transfer because apart from the one private equity, nobody else owns a large chunk. So largely, it looks like it's going to be an interstate transfer, but disclosures could be important in AB Capital. The third stock is Route Mobile. Again, this stock has been consolidating for a very long time now. Now it looks like a large selling from a leading domestic mutual fund seems to be largely over, and there are now interests back in this particular stock, and hence that stock is my focus. And the last stock is Shankara Buildcon. Now it's called Shankara Building Products. Again, in a broader market, this stock is outperforming, good 7% and good volumes as well. And I believe some bit of HNI action is back, so hence a big move in that stock as well.
Nimesh, thank you very much for that interesting list of stocks always. By the way, there is some more action in the markets now. So piling on gains, 115 points higher on the Nifty. The sensex has moved to a 370-point gain. We'll get into a break. On the other side, we'll chat with Mitesh once again for a few BTST calls. Stay tuned.
Welcome back to Closing Bell. Well, just a couple of stocks I want to talk about. Pull up the intraday chart of Central Bank of India. In the last 1 month as well, the stock is up close to around 15%. Now, the hope from the street is that Mr. Kamakodi, he gets an extension out there. So that's why that stock today as well is up close to around 3%. I'm looking at the last 1 month as well. There's big delivery being seen out there. And that's buzzing, close to around 13% higher is what we're looking at. Mr. Kamakodi, well, his term expires at the end of this month. So that'll be a crucial trigger for that stock. The other one is Raymond. The street is a little bit of buzz that something could take place out there. And the last couple of months as well, the way the Raymond stock has been going, the price action, that's indicating maybe in fact the street senses something will happen. Whether or not it takes place, well, time will tell. But for the time being, that's up close to around 4% today. It's up nearly around 25% in the last 1 month or so. But let's get back to Mitesh Thakur, who joins us. Hi, Mitesh. What are the trades you have for us? A buy or a sell trade for a reverse trade later on?
So, given the fact that, finally market is picking up steam, it has to be BTST calls. So I have Oracle Finance Services. I think that's moved to the high point of the day. Very good setup over here. There's a BTST with the stop at 34.09 for targets at 34.55. And Icon is something which has been on the radar as well. It's making a fresh swing high. So BTST here with the stop at 26.15 for targets at 26.55.
Okay, got that. BTST, it is. Mitesh, thank you for the calls. The market is now picking up momentum, and we haven't used that word in a while. Almost 17,750. So this is moving rather rapidly. The constituents are the same. I mean, it is the banks that are leading it. Some of the consumer stocks. Titan is doing very well, by the way. 2.5% up on Titan. But also look at IndusInd Bank on the other side. Now, that's a clear thumbs down from the market. Poorest performer on the Nifty with a 1.5% decline.
Right. I just want to correct myself with City Union Bank. We pulled up Central Bank of India. So City Union Bank is the one that we're talking about with regard to Mr. Kamakodi and the extension. My ticker team just alerted us. So we're talking about City Union Bank. Stock is up 3% today. In the last 1 month or so as well, it's seen a good reaction. So just want to correct that.
Okay, so that's another stock in focus. But right now, let's look at another important story, and this is coming in from the aviation space. The expansion plans of Air India and Akasa Air are likely to be impacted due to a potential delay in deliveries of the 737 MAX aircraft. Boeing has detected a manufacturing issue with this plane, and perhaps it will look at some replacements as well on certain certain fittings. We have Madiha now joining in with the latest on the story. Madiha, tell us what exactly is the problem with the plane, and could this impact a lot of aircraft?
Let's first talk about the impact this issue, as you rightly asked, is expected to have on Indian Airlines. Boeing 737 MAX is quite a popular narrow-body plane. Air India's mega order that the airline placed early this year included 190 737 MAX planes. Now, some of these planes were expected to be delivered by the end of this year. And Akasa Air, India's youngest airline, was expecting deliveries of some of the 53 pending MAX planes this year. Akasa had earlier said it will fly international by the end of this year. But now, these plans could change as the deliveries are likely to be delayed. Boeing said it has detected a manufacturing issue with the plane. So what exactly is this manufacturing issue? Boeing says that a supplier has used non-conforming fittings in the AFT fuselage section, which need to be replaced. Now, the planes which are already in service won't be impacted, as Boeing says it's not an immediate flight safety issue. But those which are in production stage or already in storage will undergo replacement, and that will take a lot of time. While Boeing hasn't specified the duration of the delay, it said customers have been informed that this glitch is likely to affect a significant number of undelivered 737 MAX planes. We reached out to both Air India and Akasa Air asking if they have received any revised delivery timelines from Boeing, but they're yet to respond to our query.
All right, Madhya, thanks a lot for that. So that's something about the aviation space. Just keep an eye out on Titan, moving extremely well right now, up around 2.5%. This perhaps could be on account of the fact that, it was Akshay Tritiya yesterday and day before the weekend, basically, and the company had launched price lock-in, schemes for gold. So the response to that is something that the street believes could be extremely strong, and as a result of which, we're seeing an up move. Maybe we'll hear from the company shortly on how this Akshaya Tritiya has been for them. And even the other gold companies as well. Kalyan Jewellers too has moved to the high point of trade, giving company to tighten. But let's talk about some numbers which are due tomorrow. We've spoken about Tata Consumer, but Bajaj Auto is the other one as well, for which Sonia is here with the key expectations. Sonia.
Well, thanks a lot for that. So, Bajaj Auto has done very well in terms of its stock movement this year. It's up about 20% has outperformed the auto index and the market. The stock is also at a 52-week high, but I'm afraid that may not showcase in the numbers because this time around, the numbers are expected to be a mixed bag. Now, although the domestic volumes have been very strong, it's a growth of 15% in the two-wheeler domestic volumes. It's the export volumes which are under pressure, and there could be a double-digit fall over there, and that will lead to just a single-digit growth on the top line for Bajaj Auto. So we're expecting less than a 10% growth on the top line, and that's because of the reasons that I mentioned. The export market has been under pressure for a while now, especially with what's happening in markets like Nigeria, with the devaluation of the currency over there, and that could hit their margins as well. So on a sequential basis, compared to what we saw last quarter, the margins are expected to fall. But perhaps the street is pricing in a recovery in the export markets because that's something that the company has alluded to as well. So in that context, management commentary is very important. I'm looking forward to hear from the management on whether the worst of the export to fall is behind us. In fact, Rakesh Sharma of Bajaj Auto had indicated in our last conversation that from July of this year is when export markets will start to recover. But all in all, the numbers, of course, the numbers of the previous quarter have been on the weaker side, expecting just a single-digit revenue growth. Back to you.
Okay, all right. Thanks a lot for that, Sonia. So that's about autos. We'll wait for the set of numbers. Earlier, Madhya, spoke about the aviation space. But Amrish Balika joins us. Amrish, in the last few minutes, you've discussed various modes of transport. I believe you're looking at the railway stocks. And from there, you find a couple of picks. Tell us which is the one you're looking at.
Good afternoon, Nigel. The heights, that's a lead transport and having domestic and international presence. Key areas are metros, rail infra, highways, airports, ports and waterways, though it's been more of consulting with about 50% of the revenue. And they have good presence in turnkey construction, rolling stock, as well as export of locomotives. But consulting margins is decently high at 44%. Close to about 700 ongoing projects with an order book of about 5,000 crores with Q3 order flow of more than 1,000 crores. So the order flows have been quite continuous. And now we have seen government focus on railways and transportation infra overall. So RITES is expected to continue with this good order book position. The company is currently working on 3 railway station development on a turnkey basis. And this, I think, is a huge opportunity going ahead. And it also has a 24% stake in Indian Railway Station Development Corporation, which is basically into the station development area. They also have a decent presence in South Asia and Africa. And they also have energy management business, REMC, where they have a 51% stake. And that's a subsidiary, and which has shown a healthy performance. I mean, if you look at the EBITDA margin, the consolidated EBITDA margin, that's about 27 to 30% if you see the last couple of quarters. So I'm expecting an EPS of about 28 for FY25. And with this, I have a price target of about 448.
Okay, 448 on RITES. That's another 100 rupees from where the stock is at right now. Actually, RITES is up quite a few of the other railway stocks, even IRCON, for instance. 7% on the higher side. RVNL is up 13%. Railway stocks on fire of late. So those are some of the names that are making it to the top list. Amrish, good afternoon and thank you for joining in. Just wanted to get your take on IndusInd Bank. The market's very clearly disappointed. I mean, I think an ICICI Bank is setting the bar so high, right? So anybody who comes short, the market is not in a mood to relent. Your thoughts? How would you approach IndusInd Bank?
I mean, I would say a bit disappointing. So we could actually see the stock, in fact, correcting further. So I think among the private sector, I mean, the larger banks, I think it's going to be ICICI Bank, which will possibly continue doing well based on the earnings. And possibly Kotak to a certain extent. I think even Kotak, I mean, I see price levels of about 2,300 to 2,400.
Ambarish, do stay on. Need to slip into a very short break with the news that the Nifty is now trying to make a dash towards 17,750. So it's only picking up in the last few minutes of trade. Get into a break. We'll come back with more.
Welcome back. A bunch of stocks not doing extremely well. In fact, seeing a sharp sell-off. One of them is Liberty Footwear. Remember, we saw a big move all of last week and last month on Liberty Footwear. We did allude to the fact that, you know, the stock sees such inexplicable big moves only to gradually see a sell-off thereafter. And that's what's taking place right now. Liberty shoes down about 8%. The other one which is not doing too well is Rajratan Wire, was lower on Friday as well, post numbers. And this morning we had the conversation with the management. Even though they are confident about growth, 20% volume growth in this year, the street sees some weakness in the counter. But a couple of stocks which are doing well, we have Westlife Development, Westlife Food World, that is, the owners of McDonald's, which is at the high point of trade, and Jubilant Foodworks is the other one which we spoke about at the high point of trade. But that's about today. In the last 1 year or so, we have Westlife, which has outperformed Jubilant Foodworks by a factor of 70%. Westlife Foodworks up 52%, whereas Jubilant Foodworks down 22%. Amrish is still with us. Amrish, you spoke about various modes of transport. How about various modes of food here? I mean, at some point, do you see pizza, picking up once again, or does burger rule supreme? Because that's what's happened over the last 1 year or so.
No, I mean, if you see, both burgers and pizzas will continue doing well, no doubt. But the question is whether these individual companies will continue doing well. Because Jubilant really had that first mover advantage, which they enjoyed for nearly 2 decades. And now I think the best is behind them. They've lost that mojo which they had earlier. So, I mean, I really don't see that stock really performing too well from here on. If you look at the same sales, same store growth, that also is not there. I mean, the new verticals which they try to bring in, the new brands which they try to bring in, that's not done too well. So I think only based on pizza, I think the story is more or less over for them. I don't think they should really get that huge valuations which they're getting in the past. So I think any sort of upside which you see in Jubilant, I think should be utilized to book out.
Ambarish, do you look at companies like MapMy India? Is that a company that you've looked at?
Yeah, in fact, I've looked at that company. I like that company. Even the performance has been quite decent. I mean, clearly, I think like they have a huge advantage when it comes to B2B. I think they have a huge advantage over Google Maps because clearly India is looking at the domestic companies. I mean, the focus is more on the domestic companies. I mean, as compared to the international ones. So I think Google Maps will lose out in the B2B business to Map My India. And this stock also has corrected decently well post the listing. So I think it's a decent level to start buying because if you're looking at the story over the next 1.5 to 2 years, I think this stock can easily give you that 25-30% sort of returns per annum.
Okay, got that. Amarish, we will wrap it up on that note. Thank you very much for joining in and giving us your view on a couple of stocks there. Well, with that, we are coming down to the close of what will go down as a big session for the bulls, a breakout session where this 4-day consolidation has finally ended, at least for now. It's a very smart looking screen and momentum in the second half of the day. Serious momentum. So as we get down to the final tally, 17,750 on the Nifty, and a large part of that is banking. We've been saying that for a while now. 550-point move on the Nifty Bank. So let's quickly start pulling out the winners. The winner actually is not a bank stock. It is a BFSI stock, but not a bank. We're talking about HDFC Life. Big beneficiary from the fact that RBI will allow the merged entity to take its stake up in HDFC Life and even in Ergo for that matter to 50%. The overhang of the stake sale from parents, that goes away. So that was the big kicker there. Tata Consumer very smart ahead of its numbers, 4.5% up. Some other consumer names, by the way, Nestle, Titan, they did fairly well as well. But really the day just belonged to banks. Look at it, Axis Bank, ICICI Bank, State Bank of India. Even pull up the merger duo, HDFC and HDFC Bank. Both of them up and about. Solid day for the financials in terms of leadership today.
Just take a look at the broader markets. Plenty of stocks did well. A smaller stock, EIMCO, Emco Elecon India. They don't talk about that very often. It's a small market cap company. The parent is the larger one. That was up close to around 20%. Post its number. So that was locked in upper circuit. RVNL did pretty well. Well, that stock was up close to around 14% in trade today. PowerMech, it won a big order in Friday's trading session. The street seems to be quite confident out there. So that stock as well was up close to around 10% in trade. Bank of Maharashtra came out with its set of numbers. It seems the street liked it. The stock locked up close to around 10% or thereabouts. And a couple of other notable winners. Well, the street expects, I think, some corporate action on NRB bearings, or maybe some kind of land sale, or at least that's the buzz. So that one, in fact, was up close to around 8.5%, and that's been moving with good volumes as well. But Rima, what else?
Well, in the banking space, there were also two disappointments. One of them was Yes Bank, down 3%, and the other one is IndusInd Bank, where the slippages have gone up 10% on a quarter-on-quarter basis. All the other banks, whether it's an ICICI Bank or a Yes Bank, they've reported a decline in their sequential slippages. But for for IndusInd Bank, it's gone up, and that weighed on the sentiment. But just a quick word on some of the other drags, particularly in the large cap space. You had pharma taking a backseat. There was negative news on Sun Pharma's Mohali unit. That pushed the stock down by 1%. But other pharmaceutical names like Dr. Reddy's, Cipla came in for profit taking. Divi's Laboratory as well. Big mover over the last 1 week. But the stock today was down 1.25%. Maruti Suzuki was another stock quite subdued in trade. On the gaining side, Tata Consumer fires up ahead of numbers tomorrow. Stock ends with a gain of close to about 5%. Titan Industries quite strong. And you had strength in a couple of the other names across sectors. JSW Steel, Hero Moto, Hindalco, Adani Ports. All of them managing to see some green on the screen. All in all, 125 points on the Nifty, 17,750 is where we are likely to wrap up this training session.
Well, I think the Nifty got a little bit, everyone's poking fun at it. You're not moving too much. He said, today I'll hit a century. And the Nifty Bank was in fine form. So good going.
Absolutely. So the week starts off with some action. Let's see if that continues. More earnings and, of course, lots of global macro data releases as well that will drive action for the rest of this week. But for now, it is curtains on this edition of Closing Bell. Don't go anywhere. Our special offering, the Medicine Box, is coming up next.